Welcome to the Trading Pit, your virtual gathering for sophisticated traders. It's January 23rd, and man, the markets are bleeding red. And I can't wait to talk about it with two of my favorite analysts that are joining me today. I'm Marconi White, and I've got JJ and Benjamin joining. They're going to answer how low is this market going to go? I'm going to dive into the analysis with JJ, but first, I want to give a special shout out to CoinCall, who is sponsoring this video. If you don't know, CoinCall offers a full suite of options, futures, and spot trading for your favorite crypto assets with competitive fees and an elegant interface. And if you don't believe me on the interface, at the end of the show, JJ is going to jump into it and show you his favorite DGen trade of the week. You're not going to want to miss that. All right, let's get into the meat of it all. JJ, I want to ask you the same question I always do. What is the mood of the market? Are we bull? Are we bear? Or is this just simply boring?
You even have to ask that today? Quite bearish.
I'm a scripted robot. Have you seen my face? Of course, I'm going to ask that today. Yeah. Okay, hold on. You deserve this. I got to give it out.
Yeah, very fitting today.
Oh man. Okay,
ugly
break it down. What is the spot telling us from the bear?
So take a look here at the daily. You see that we're just breaking down below every meaningful technical level at the time. We just lost the 100-day moving average. That was around 39,000. Broke to the lower end of this Bollinger Band. You see the RSI is just rapidly declining. This was kind of the tell. The week of the ETF, we lost this 50 RSI mark on the daily chart, which we had ridden up the whole way since October. Then once that fell, we just couldn't get it back, right? There was that attempt there when we were at, I think it was last week actually while we were recording. Looked like price could make a move up, hit those liquidation pools at that point, but it just keeps falling lower. Market's just been overwhelmed by supply at this point. There is, thankfully, we've seen a substantial demand on spot in these Coinbase order books. There's still large bid walls. So this is basically our plunge protection team, and that's the only thing that I see really saving us from going down to the 200-day moving average, which is currently around 33 or even below. There's just so much supply that's come online due to the Grayscale unlocks and the fear of the unlocks that just kind of created this self-fulfilling prophecy of downward price action after the 4 months plus of up only that we had. So the market's just mean reverting right now in a brutal fashion.
You know, I'm looking at the chart you have up on the screen. The volume profile doesn't look as substantial as one may expect given the sell-off.
That's kind of worrisome too, I believe. So I think it's just been persistent sell pressure. You can see this here on Coinbase's order book. I sent out a tweet about this yesterday. It's like you don't see them putting up asks, but what they're doing is they're consistently swapping out, which is time-weighted average price. They just have an algorithm. The ETFs gives the Bitcoin that they have to sell out at the end of the day. They give it to market makers, and market makers are just persistently selling that supply at the current price, which is just driving it down. And these basically limit bids are the only thing keeping it up while they sell out of price in this range. So you could see basically as soon as the New York Open happens, the swap turns on, start selling. And these bids are the only thing. It's shifting supply. So there's definitely some demand here from people that want to get into these ETFs, and that's what's holding it up. But it's going to take a while for the market to overcome that supply overhang that's just come unlocked in the recent weeks.
What's your perspective there? We talked about it last week, or maybe it was early actually this week about, geez, what is today? Today's Tuesday. I'm drawing a blank. So much happens. This is crypto, you know.
Moves fast.
Every year happens in an hour. Last week we were talking about the fact that it was Grayscale. All eyes were on Grayscale and the fact that they were sending something like 10 to 15,000 BTC to Coinbase every day. Is that still your perspective here? Or are you starting to see some pile on maybe from some other sellers?
People are they've been shorting. So we point this out last week too. There's those liquidation pools at 44,000. And I was actually surprised to see that we didn't get a relief bounce. Like you saw these bid walls here at 40,000. I thought, okay, maybe they go up and take that liquidity at 44K, but there's just been the market's been unable to gain any momentum to the upside whatsoever. Every time price makes a move up, that swap just comes in, unleashes more supply into it, and it's just been persistently bleeding down. So from this range, like you see kind of this RSI is falling into really oversold territory. It wouldn't shock me if we see a move up, retest this range, take out some short liquidity around 42,000, maybe even as high as 44, but you're really betting on an outside scenario. Like they're keeping kind of volatility even capped to an extent. So if we look at the implied volatility, it spiked up a bit, which is not what you want to see. I think this is hinting at the effect that the downside could be more severe, or we could see some whipsaw price action, like a move back to 42 to 44 and then back down to new lows. It's just going to be very difficult to trade this. Like, the market structure has changed so much since these ETFs went live that we're all just kind of guessing in the dark right now for the most part.
Okay, so obviously the spot looks weak. The sell-off even looks like it could have been weaker if it weren't for these buy walls. From a perps perspective, what is that telling us about it? If retail is starting to jump in, trying to turn this into a good opportunity for them, are they still sitting on the sidelines waiting for a little bit more direction from the market?
They're getting chopped up. So just on this past drop, we saw another 22 million of liquidations. Last week, we had 22 million in a single day on the 22nd. You just see persistent red candles here, which is just longs getting wiped out. All those longs that accumulate that we were pointing out pre-ETF, like, hey, there's a lot of leverage in the system. Be on the lookout after ETF. These things are vulnerable to get wiped. We're seeing that kind of inverse reaction play out now. So on the way up, we were liquidating shorts the whole way. And now, as we fall back lower, we're just taking out all that long liquidity that had pulled up below. And it might be a while before we start really hunting shorts again. It'll come, but that might not be till April or so.
Okay. But I do want to ask you about options. I mean, everything here obviously is painting the bearish signal. I do want to ask you about what the options may be saying. But Benjamin, I want to bring you in here. Is there anything you're looking at when you look at the spot and the perps markets? Is there anything else that you've seen that maybe gives you a slightly different perspective?
I think we're still missing a liquidation event. So far, since the time of ETF launch, we have been dumping, but I don't think we have seen enough liquidations. So this could be also because, open interest has diluted quite much since the ETF news. As such, there is disinterest in open positions in perp side, and on CME side, anyway, a lot of positions are getting closed. So open interest on CME side is also dropping. So what I believe we have not seen yet is a across the board liquidation event, which basically wakes people up in the middle of the night and they're like, "Oh, great, I got liquidated." So it's been a very slow.
Preventing it.
Yeah, there's been a slow bleed approach over here, and yeah, I think once we have that, probably we'll get that once daily RSI is below 30 or something, then we get a long wick, and then we probably see a few bullish divergences on daily time frame play out sideways for 2-3 weeks, and then we get a run back up to 44K if everything goes well. And it also depends on where we do that local bottoming.
So there's
there's
Bear and then there's Benjamin Bear. So imagine we've gotten down to 38, 35, and
this was my thesis was that for the entire month, as long as we hold the yearly open, which is basically 42,400 approximately, I was quite bullish. So once we lost 42,400, then there is no argument, because it's now turned into a ball which is sitting on the floor. So how can you expect it to bounce?
Yeah, that's a good point. You see it clearly lost that momentum too.
Yeah,
like there's just
so I was really hopeful. In fact, I publicly admitted in Twitter that my base case got invalidated, and I really thought we had hit a local bottom, because there were some liquidations after the January 12th or 13th event. So I thought, okay, this is fine. Let's consolidate on 4-hour over here, build some divergences, because there was some buying going on over there. And it was also expected the Coinbase selling will subside and the discount will settle down, at least over a weekend. But not even in weekends was the discount, getting back to neutral levels. So which means there is consistent outflows, or this market is able to find consistent supply somewhere. It could be because of GBTC, it could be because of someone else, but there is a flow into the trading market. It's not just about OTC. So let's say all of the ETF based flows are found OTC and dark pools, and someone else is, selling out, and they're doing in exchanges, because we could see Coinbase actually selling. which means there is a live supply that's coming in. So it's not just the dark pools and OTC supply. So someone else, or maybe it is just GBTC selling. We don't know that for sure yet. But yeah, so once yearly open is lost, there is simply no argument at all. Price has to find a base. So we just have to wait.
So when we talk about this wick down, we previously talked over the last several weeks about a 30% correction, something that the market hadn't experienced for extremely long time. Is that what we're looking for to give us a signal that, hey, we've cleared out excess, we're ready to reestablish that bottom, and now we can start to see where price is going to move and how quickly it's going to move?
Something like that, but
yeah,
we are already at 20% drawdown. But the thing is, if you look at Ethereum and others, they're only now starting huge drawdowns.
Mm-hmm.
So I think everybody was quite solid until BTC lost that yearly open level at, the black level at 4,500 or something. And once that got shaken out and there's not much sign of stopping down of the Coinbase selling, now a lot of holders are starting to flip because the theory was that probably it takes 10 days, everything settles down, outflows basically stabilize. And, but that theory got proven very badly wrong. So once these levels are lost and selling continues, this continues, it's a bad play.
Well, how much of this, and I think you spoke to this just a minute ago, you talked about the dark pools, how much of this is over the counter. I saw the headline just yesterday about FTX selling out of its Grayscale holdings. Then we have obviously the commentary we've had over the last week about the fact that all the 10 to 15,000 BTC coming from Grayscale into Coinbase. But how much of this is a rotation into the other ETFs because of the expense ratios that you have on the Grayscale ETF? How much of it is just going into the ether and being absorbed perhaps by market makers?
I don't think it's going into ether, but I think there is definitely the premium discount arbitrage going on. For example, it was around 150 BPS and then it came down to 110 between the other ETFs and GBTC. So and then it became 80 and then it came down to 50 and 30. And we have to wait and see this week where the premium discount arbitrage basically closes at. But if that keeps declining, then eventually the incentive to sell GBTC to move into other ETFs will stop. But the problem is not that. So if the argument is that people are selling from GBTC to move into other ETFs, then that's fine. This is short term, and we can be bullish about. We can be a bit more confident. But what is not clear is that the majority of the flow that's coming out of GBTC, or is it people like FTX and probably Genesis, who also has a lot of GBTC? They're in their bankruptcy proceedings, and now they have found an outlet. So these entities to whom Barry and DCG owe a lot of GBTC or debt, if they were basically unloading the GBTC or ETHE, then that is a different issue. So they are not unloading to go into another ETF, they're unloading. So basically you have to sell that BTC. So that's why it is a little unclear. That's why these entities, when they operate via prime brokerages and OTCs and dark pools, they are hedged in those instruments, which is not the same as CME instruments. It is not the same as your Coinbase instruments or Bybit or Binance. They don't go and hedge in these exchanges.
Right.
You don't know. Those are all constructed hedges. There's synthetic hedges that's built by prime brokerages for these ETF products, which you don't have access to as a data.
Well,
so we don't know that unless someone from those entities openly speak about it. So because of that, it is very evident that market is finding supply somewhere. So it's probably all these bankrupt entities which are unloading because they have found an outlet, and now they can literally force DCG and Grayscale to redeem it, which they couldn't before, right? They had to sell it on Fidelity and third-party brokerages, but you don't have enough liquidity to unload $3-4 billion into it, right?
Right.
So that's why everybody was waiting, and now all of those bankrupt entities are exiting. I mean, imagine if FTX they have sold 1 billion, and Genesis has another billion, maybe 2 or 3 other entities who are also declaring bankruptcies. They also have a billion each. So there's no reason you shouldn't see another $4 to $5 billion worth of outflows. So we need to wait and see how this all gets taken care of, and if this is really a net buying effect or net outflow effect, or if this is something else. We don't know that. That is the tricky part here.
Yeah, so I think that's a fair point, particularly for those who are constantly looking at the data that we do have access to. You have a bias towards this sort of visibility, which, in fact, to your point, I mean, there's hedging that can happen that's completely in a black box. There's perhaps OTC that could be happening, which is distinct from what you see for the flows going from, let's say, Grayscale into Coinbase. You don't always have visibility into everything, so you got to sometimes, obviously, you have to wait. I guess, JJ, I want to come back to you. Do you see anything that would, I hear this and I wanted to paint a little bit of a bullish picture, but I wanted to hear, JJ, what you just heard from Benjamin. Anything you want to add to that in terms of the visibility and what this means from a sell-off right now?
That's a really good point, because the market's changed so much with these ETFs going live. So like you said, now there's more of that black box effect. So the things that we've been relying on historically for data and edge, those things are getting diluted, and they're kind of losing that, at least in the short term, until we can find some kind of reliable patterns here. It's going to be very tricky to kind of play this successfully. You just have to, don't fight the flows, essentially. Like, you see price going down, you don't want to be on the other side of that. Like, you're not going to be the person that's providing exit liquidity for FTX, right? You don't want to be that. So
yeah, I mean,
you see it in the tape.
10 minutes ago, we have 10K BTC approximately flowing out to Coinbase from Grayscale. So, I mean, we need to see that toning down to 1,000 or 2,000 BTC a day. It's fine that there are outflows, but it has to tone down soon. And it's possible market finds a bottom much faster before all the outflows are done. But we need to still see the Coinbase discount diminish. I think I shared a post a few days ago on how, if Coinbase discount continues to hold, then it has resulted in massive corrections. Like, we used to have that type of corrections in 2022 near the tops. So that is the type of perp basis discounts that we are getting right now. And this is a big headache because it puts all the perps at a expensive price because the spot is very cheap. That's not good. So eventually this will lead to a liquidation event. We just don't know when. We just don't know if it is today or tomorrow. But that will be an event to definitely purchase, like buy a truckload of Bitcoin, if you could. So it's basically, it's good if people wait right now rather than rushing and feeling missing out on a few shorts or whatever. Because if it does bounce, then there will be a very solid short opportunity. That would be a very good leverage short opportunity. So I don't think anyone has to rush into a short here at 38,600.
I'm laughing in the comments here. We have Ole Kuhlberg who says, "But at least we get to dump on the boomers." So there's a little bit of a revenge in the market right now happening. Thank you, Ole. I appreciate that.
What I kind of see in this, like, you see these bids getting filled here and whatnot, these bid walls on Coinbase, these are people that are going to be very patient. So they're buying it with the expectation of holding it for 1 to 2 years, and they could care less if we go below 32K. As where your typical person is buying it hoping for a bounce to 42K tomorrow, so it's kind of a shifting of supply from the impatient to the patient, which is good long term. But yeah, I think, like, you don't want to be catching this knife here, right? Because look at your downside. Like, if we don't get that bounce to 42, 44K, whatever it is, and we just keep going straight down, you're looking at, say, sub 33,000. So you'd be better off waiting to buy there or to sell it if we get up here. Just like trying to figure out this middle area. That's how you lose a lot of money in chop conditions. So I'd be very wary of that.
Yeah, no, that's a fair point. All right. Well, I think we've painted a very bearish picture, and Benjamin, I'm just going to call you Bear from now on.
No, I don't want to be a bear.
You don't want to be the bear? You don't want to have that sound effect coming on? All right, I'll have to figure out something else from you. Maybe you're a chameleon. JJ, I want to look at the options market and see if there's anything that's starting to signal from there. We just talked about the fact that there can be options sitting in black boxes that we can't see, but for the ones that we can, what are they telling us, if anything, right now?
So like I said, we saw a nice spike off the bottom and implied volatility here. It's probably, I would assume this may be a long-term bottom. I think we're going to see more volatility because if we do get that long liquidation run to say 33,000 or below, that's going to bring volatility screaming with it. If we get a bounce back to 42K, that's volatility as well. So I think volatility is just going to keep steaming uphill here in the next couple of months. We really saw that huge sell-off. Everybody took profit on their options after the ETF. And it just got way oversold. So now it's bouncing back to normal conditions. In terms of options, like they're still cheap. So if you want to play the volatility, there's options. No pun intended.
Right.
Those ones we pointed out last week are doing quite well now. We were pointing out anything below 40,000 was pretty cheap at the time. Now they've multiplied since that nice IV spike. So maybe take some profit. These are the February, the ones expiring at the end of February here.
Well, I definitely want to get into some trades, but let's revisit those in a little bit because we even have a question here from Albin Juan asking about comments on coin. So I know we're going to want to get to that in a little bit, but okay. So just to kind of summarize where we are at this point, obviously we've seen a lot of selling. We continue to see a lot of selling at the spot level. It's and we're not seeing any let up yet. I think, Benjamin, you just mentioned we really need to see that 10 to 15K start to taper off and go closer to, you know, just dropping down maybe 3, 4, 5,000 would start to be a sign that we're exhausting some of that supply. And then from an options perspective, we're seeing some of that spike up, but options are still very cheap.
I think what everything is after we lost 40,000, you saw some rush to the downside to buy some protection. Yep. And that brings implied volatility levels going higher. Because as more people have demand for downside options, market makers have to raise the prices on those, which raises implied volatility, et cetera. Kind of creates like a self-fulfilling prophecy. So it seemed like people didn't want to hedge until we lost 40,000. Now there's the need to hedge, right? You have a massive spot position. You have to hedge that somehow. How do you do that? Most likely options. It's the most effective route. So I think that's what we're seeing now, some hedging effect going on.
Okay.
But didn't the options get cheaper recently? Puts got cheaper few days ago.
Yeah, they were extremely. That was the strange thing about Friday. So as we approached the 40,000 mark initially, implied volatility kept dropping. So it seemed like people were actually selling volatility at that level, whether it was calls or puts. They were selling them for yield, and then obviously if they sold calls, they're doing quite well. But if you sold 40K puts, you're under quite a bit of water right now. But that was interesting. It was kind of a mixed signal there because as price was going lower, implied volatility was dropping with it. But now we see that spike up, and we finally saw that rush to hedge yourself a bit here.
Okay, so we may see some action right now, which is about maybe they were what I guess you could call naked holders on the spot who are now trying to rush in to buy some hedges. I guess last question I want to ask on the spot and BTC front. Are we still seeing whale accumulation? We talked about how that had tapered off relatively recently and started to pick up again on the metric that we have. What does that look like?
So since what day is this? Since the 19th, we see so when you see the orange dot here, that's the whale wallets up, the ones holding greater than 10,000 Bitcoin when they're net accumulation on the day. They had been selling since late December, and then it seems like they stepped in here around 40,000 and start buying again. This is more of a delayed signal, like doesn't mean a bottom is coming or anything. It's just that they find some sort of long-term value at this level, it seems. So that's an encouraging thing long-term, especially if it continues on any drops further. It's just showing that whales see value at this level, and we see retail distributing. So whale up, fish down is yellow. So that means smaller wallets are selling, larger wallets are buying. Bullish thing long-term, but doesn't help us much in the near term, I don't think.
Right. Well, and yeah, and I just want to cap this before we start talking about the Dixie and as well as alts, because I do want to get into those. But what is the perspective now on how long that this selling can go? I mean, we talked about just pure price levels, but I think we on previous episodes going into late last year, we talked about the fact that this could be multiple months, you know, at least several weeks, but multiple months of people finally exiting the Grayscale vehicle. So what's the perspective here that, you know, if we're talking about 10 to 15,000 going down to like 2,000, what do we think is the time horizon for that? If there's any kind of signal here that we have right now.
I think we see a good parallel here. So if you look at July through October, basically. Just this downward momentum. Probably lose the 200-day, consolidate, and then we'll see it start to pick back up after the halving. Just the supply and demand factor that alone. Right now, we have an overwhelm of supply, and there's just not enough demand to meet it. The halving will help with that. We'll have all of this supply getting washed out over the course of the next couple months. It's going to be sold eventually, and then at the halving, you add an extra factor to that where all of a sudden there isn't that massive daily overhang of supply every day, and it creates kind of it gives us the momentum we would need to move to the upside from there, because the selling would relent and we would have room to run, but it's going to take a while. Like, things that look this ugly don't get repaired overnight, So I wouldn't be expecting like a V-shaped recovery or anything like that in the near future.
Benjamin, are you thinking the same thing in terms of your horizon for how long that this sell pressure is going to be in the market?
No, I don't think a V-shaped recovery as such, but I think a V-shaped bounce is definitely possible, but probably not from here. It's a little difficult to call it here, even though there's a lot of bids on Coinbase and Binance Spot. I think it's giving a lot of confidence to many people to hold or start opening longs over here. But I still think we are missing a bit of a liquidation event. I think it will be pretty evident that we had the pre-selling climax. I don't think we are at the climax yet. So it could take a few days. Maybe it is done by today, or it could take 3 weeks. That's hard to say. But we are not at the pre-selling climax yet. The pre-selling climax is when we get a long wick, and then we get probably 2-3 weeks of consolidation. It goes down. We get a lot of rosy alerts getting triggered. We get a lot of spot alerts getting triggered. Order books then start to thicken, and then we see a lot of call buying happen. Then we can like say, okay, this is great. Now we are good enough to run to 45K. Like, it can be a very good lower high formation in case if this still plans to go down for 6 months or so. But right now, I think it's a little too early to still call anything. Like, we could easily go down to 33K if this keeps continuing. But I do believe that before Coinbase discount disappears, we will start seeing some type of evidence which says that, okay, we have to start preparing for a reversal. But for now, it's simply wait and watch.
Yeah.
Simply wait and watch.
The only thing that is bullish right now is just those bid walls, but I think that's basically holding up price so they can swap out. So it's not all that bullish after all.
That's what it is doing. That's what it is doing. I don't think, because you have the same set of walls on the perp pair as well for Binance. So that is not a sale of confidence for me.
Right.
Yeah.
And if
like
you take coin, someone was asking about coin, right? Like, if you basically, it has been bearish since the yearly open. So I mean, it's hard to be very bullish on coin. And we need to see how Dixie plays out as well.
Yeah, okay. Well, I want to transition. I've got a question here from the audience that I want to answer, and I'll ask that, and then I want to talk Dixie. But just give me a minute here. So, question came from David C. Question is: many have used CME gaps as a cheat code in the past. Do you see CME charts providing? Trying to get this provided less of importance since ETF launch. So we're going to ask that, and then I want to go into the Dixie. But before we answer this question, I want to give a shout out to everybody who's asked us the question, which is how do you support this show, right? How do you support it? And it's really quite easy, right? The very first thing that you can be doing is like and subscribe this episode and all the other episodes. It helps us get out to the algorithm. Also hit the notification bell, because a lot of people are asking, how do I hear the show? When are you guys on? Well, we're on every Tuesday and Thursday at 9:15 Eastern. So we're around when the bell goes live. So hit the notification as well. Then I would say you can share this episode and any of these episodes wherever you're talking to people about crypto. That can be on private text chains. It could be in Telegram groups. It's on Discord groups. Share with people that you think are sophisticated and want to have a different perspective on the market. That's another great way to get us out there. And of course, the last way is to use the link, the CoinCall link, to sign up, to create a CoinCall account and to trade. And again, if you are unaware of what CoinCall is, they offer a full suite of options, futures, and spot trading with your favorite crypto assets. And as I said before, they offer great fees with an elegant interface. And in fact, JJ is going to show you what that interface, he already did in this episode, but he's going to do it again so you can have a better sense of how a DJ could actually be trading on that if that appeals to you. So those are all ways you can support us. And we do appreciate everyone that showed up every single week to hear what we have to say. And we're glad that this is helping you think differently about your own investment and trading options. Okay, I put that out there. Appreciate everyone giving us the support. I want to answer the question around the CME options, and then I want to go into the Dixie. So to repeat the question coming in from David C, does the CME gaps give us any perspective on where the market may be going in the near term?
Over time, they're usually filled. So we just saw one filled here. I think they are helpful, but they're not gospel, right? Like there's not always
it's
100%
like
chance they have
levels.
to get filled.
It's similar to liquidation levels.
Exactly.
You can have liquidation levels. It doesn't tell you the direction, like very clearly. Like it will get hit, but should it get hit this time, or maybe it waits for a week, maybe it waits for a month? Everything that is important sits on the perp basis, the discounts and premium. That tells you who's leading, whether it is spot or perps. And then basically you just got to respect the levels. You've got to look at VWAPs. Where do we stand? Have we recovered a few levels? This is why yearly opens, monthly levels, Monday ranges all matter a lot. And you can make some conclusive decisions based on that, because these are levels which rarely get faked out. And because a lot of institutional volume also uses such type of very trivial levels to execute positions. So that's why you see some of these levels, once they are lost, you see more volume comes in, more selling comes in, more pressure comes in.
So this is one of my favorite examples of the CME. So there was a gap from the weekend that Luna depegged, and then Bitcoin obviously crashed, and it was around 35,000. We didn't close it until obviously November of this year. So you could wait a whole long time for those gaps to close. You know, you don't want to be like, oh, it has to close the gap today because there was a gap there a month ago. It could last much longer than you anticipate for them to actually close. But if they're close enough, like that's a level to pay attention to. Like if we're at 39,000, you know, there's a CME gap at 38,000. Odds are that's going to get filled, but you don't want to like base your entire trading strategy around that. Is how I would say it.
Okay. Well, I think that answers that question. All right, let's dive into the Dixie. I think after we go into the Dixie, I do want to be asking a couple more questions. We covered a little bit about coin. We had a question here about how's ETH broken a critical level. I want to get to that, but if I take the picture that we have right now, Bitcoin looks like it's looking pretty weak. Usually, it is the king, and it starts the momentum for the rest of the market. So if it's weak and we start to go into a stronger Dixie, this could be a very strong risk-off signal with a lot of downside on the Bitcoin side and the rest of the market at large. So JJ, walk us through what Dixie's looking like, because we've been warning about this for at least a couple of weeks. And I know the end of the month is really a critical point for it.
This was really the tell all year long, is that Dixie clearly bottomed out in December, and the market didn't want to hear it because the ETF was too powerful of a narrative, right? People see what they want to see sometimes in markets, and you ignore the obvious, which is when Dixie's clearly creating an uptrend, it's not good for Bitcoin. So regardless of the catalyst, like we could have the supply or not have the supply, it would be bearish, because when Dixie moves like this, it's warning you. I don't know what it's warning us about, but it's warning us, right? We have every reason for Dixie to be lower, like the rate expectations rising, et cetera, and it's not going lower. I saw a great chart by Dharmafy at Dharmafy on Twitter. He does a lot of work on net liquidity levels, and net liquidity levels are actually as high as they've been since April 2022. Yet Dixie is up above 103, and it's looking like it's breaking out. So that's a pretty powerful divergence. You have what you would think would be bearish Dixie, right? You have higher liquidity, in seemingly it would be in excess of dollars in the system, but Dixie's telling us that there's actually a shortage of dollars in the system when it moves up like this. So that's something to be extremely worried about. And we have the FOMC coming up next week. There's a lot of things to be weary about here. It's breaking above its 200-day moving average, or trying to, which is current. Yeah, it's at 103.47, and Dixie broke above that today. So that's as clear as a risk-off signal as you could get when it's moving like this.
Now, I want to come back to the end of the month. We talked about that a couple of weeks ago, why that was such a critical moment. I don't know if it was looking at the monthly or weekly time frames, and so that gave us sort of this I guess this target point. But what are you looking at for the next couple of weeks? I mean, obviously, it sounds as though you're painting a pretty bullish picture. The momentum is supporting the Dixie moving higher. What's your perspective on how long that goes? I mean, any thoughts there?
So if it gets above this 50 RSI mark, I mean, we have a couple big macro data points coming out. So this week we have the GDP print, right? So if that comes out higher than expected, that's kind of the Fed's green light to leave rates as is. If it's lower, then we'd see rate cuts and likely Dixie fall. But I have no read there, so don't ask me about GDP numbers. I just know that it moves the Dixie. That's my edge there.
You didn't take a crystal ball out from under your bed?
No, no idea.
Do an
Literally zero idea.
Okay.
But what Dixie is telling, what I see when I look at the Dixie chart is that number is probably going to be high. Otherwise, Dixie wouldn't be running like this. Like, news always gets priced in beforehand, typically. So either that GDP number will be unfavorable for macro conditions because it'll likely signal that the Fed needs to leave rates tight, or it won't and it'll reverse. But like, I think if it was going to reverse, we would have saw the reversal last week. It's just been running really strong, and I think the market's sending you clear risk off signals here. This is not a condition to be looking for longs in until we see a firm reversal here, back below 103 at least, in my opinion here. It's just,
Benjamin,
this is not the market to fade. I don't know how else to put it. Like, I've studied this correlation so intently over the years, and this is just not the conditions that I'm looking for longs in.
Right. Benjamin, any thoughts there on that analysis? Anything that you would offer as a contrarian, perhaps?
No, I think probably we are just forming this new range now. It's probably between 33K and 40K. It's possible we just range in this level for 2-3 months, and then we see how halving goes. Maybe Coinbase selling subsides by then.
Okay.
Maybe
Well, no, well,
that would be my bullish. That would be my bullish perspective, to be honest.
Well, I was asking more from a Dixie perspective. Anything that was just shared by JJ? Is there anything there?
Oh, yeah, 100% in with them.
Okay.
I see no other alternative.
All right. Good to know we have a group, a variety of opinions on this show.
Another thing to point out with this inverse correlation here between Dixie and Bitcoin, my chart will load. Just see if I can get the Bitcoin overlay on top of it for you. So typically what will happen is Dixie will bottom, or Dixie will top, and then it'll give you time to enter. It's not necessarily like Dixie top today, you have to buy Bitcoin today. It's more of, it gives you more edge because it takes a bit of time for those signals to play out. So like we saw in September, I think I pointed this out last week too, Dixie topped in October 2nd, and it wasn't until October 9th that we really saw the massive leg up from Bitcoin. And if you go back to 2022, you see Dixie topped in September and Bitcoin didn't bottom until December. So there's always this lag period, which will give you room for entry. Like, you don't have to worry about nailing the top on Dixie. It's a very complicated market that goes beyond most of our understandings, if we're being honest, right? So just wait for it to give you the signals. Wait till you see a clear breakdown where you feel confident saying that, okay, Dixie's cooled down. It's not going to make a top. Maybe the FOMC is more favorable than we think right now, right? And Dixie ends up breaking down. That'll be your point to enter. Don't try calling a top on Dixie. It's not your market, right? Just follow the signal that's giving you.
Okay. Well, I think, if we take the whole card here, everything is just suggesting this, the time to take profits was actually a couple of weeks ago when we were seeing some additional froth. In fact, we talked about that just going into the beginning of the year. I think we talked about how we had too much froth on the cappuccino. And so if you were listening to this show, you knew that it was time to de-risk if you're in this, more of a short-term play. Now, I think it really is going to be about trying to save your downside, because everything is looking from the spot market selling off and continued supply coming online, where the perps are positioned, and just the options, and the fact that Dixie doesn't look like it's going to be any weak anytime soon. This is definitely a time to have that dry powder sitting on the side. Okay, so that is the picture from a Bitcoin perspective. I do want to answer the question. If we look to the rest of the altcoin market, in my mind, the mental map is something like, Bitcoin goes up, and then Ethereum, the L1s go up, and then you start to see the rest of that risk go through the rest of the market. And the same as we go down. As Bitcoin comes down, you have a lag effect as it starts to hit the rest of the market. And you guys can let me know if you actually see it differently. But as we start to see ETH breakdown. What's the expectation now as the risk off starts to affect through those different risk structures in the rest of the market?
Yeah, it's just beta gives and beta takes away. So you just have to realize the game you're playing with alts is that when Bitcoin goes up, they do great, they outperform it, but the same is true to the downside. So we look at ETH down 7% today. We pull up Sol. I imagine that's getting probably slaughtered as well.
Yeah, I'm looking at just the raw price data directly from CoinMarketCap. At time of recording, Bitcoin's sitting 9% down over 7 days. Ethereum 13%, Sol 15%. So definitely some pullbacks here.
Yeah, that's just the nature of it. Is that when Bitcoin goes up, they outperform to the upside, and when Bitcoin goes down, they outperform to the downside. There's no reason to believe that's going to change anytime in the meaningful future. So just realize that, like, it's all centered around, like, Bitcoin centered around Dixie and alts are centered around Bitcoin. It's just kind of this like domino effect of how these correlations play out over time. Well, and you have to be aware of that. It's hard to play anything in a silo.
Well, let's get a little bit more specific on that. We've talked about on this show the ETH BTC pair and how it may be getting to a point where you could really pull the trigger. We obviously saw ETH run against BTC over the last couple of weeks, but maybe is it going to have that capitulation moment, which is going to make for really good entries?
I think so. If we get that liquidation run that Benjamin was hinting at, we go below, say, the 200-day moving average on Bitcoin. I imagine you'll see this ETH BTC pair retest the bottom. Like we were pointing out, it had this huge wick up, but look, the volume was not very convincing at all. It didn't hold above the 50 RSI mark. It looks like it's going to reverse. Whether that's back to the lows or not, who knows, but you'll see it in the volume. When there's an actual bottom here, there will be a massive amount of volume that comes in from BTC to ETH, and most likely that's going to happen when Bitcoin's in an uptrend. I don't think that's necessarily going to happen when Bitcoin crashes. I don't think you'll see a flight to ETH. I think that's more likely that this pair will go down probably to lower lows. Bitcoin will go down lower, and then Bitcoin will recover, and at some point after that recovery, you'll see the rotation into ETH, and you'll see it in the volume. You'll see volume comparable to these past bottoms here, and that'll be your signal to go risk on into alts. But it's
I
not
think
there
ETH
yet.
we can even head to 2,800 or something.
Not looking great
on Ethereum. Yeah, because that was basically the bottom in 2021, and I think it was also capping ETH for 2022. So, and yeah, it's
realize though,
possible
like
we
this,
should just.
what we're talking about is very depressing, right? Yeah, the market's more than likely going to crash in the next couple of months, but this is where your money's going to be made, is playing that crash, right? If it does come to fruition, we get kind of that perfect liquidation. Like, yeah, it's scary, but when you look back over the course of the next 18 months or so, like we know what's going to happen if Dixie gets too hot. It goes over, say, 110. We already know the playbook. It's unlimited money printing, which translates to basically unlimited prices for Bitcoin and Ethereum. So if you do get that crash, like, you should be excited for it. It's going to create the same opportunity that people saw in March 2020. If we get that crash now, you would be gifted that opportunity to get long. So don't be afraid of it. That's just kind of my advice. Like, embrace it, understand it for what it is, right? Is that the market gives these opportunities every few years, and we might be on the cusp of looking at one here over the next couple months. So prepare for it and be excited if it does happen.
And JJ, do you think we get a bounce somewhere here?
I think we're overdue for a bounce. I'm surprised that we didn't bounce back from that 40K level. Yeah. So that's kind of worrying too, is like seeing the amount of shorts that were coming in and that we didn't take that liquidity. That, like, as we're saying,
I've been running a thesis on, like, I've still not validated it, but I've been seeing a lot of professional differences in how shorts have been trading over the past couple of months, as we headed closer into the ETF approval kind of a situation. It's like seeing a lot of evidences where a lot of short traders have gotten much smarter in their execution, and they don't end up holding into situations where they could get really squeezed out. So if that maturity keeps increasing, then eventually we can see that shorts probably are not going to be much of liquidity to move things up. and
Mhm.
other institutional traders could also realize that, because we could start to see that in the flows. Like their executions are really smart. They're entering and exiting at very good levels and at very smart situations. They don't really end up becoming those like bear sayers who used to hold below 30K in 2021 and get squeezed out and start closing at 40K. I don't see that happening anymore.
Yeah,
So
we're not
there's a
trading
bit of a
against Bybit anymore,
maturity.
unfortunately.
Yeah, there's quite a lot of
It's-
maturity with respect to leverage trading, I feel. So
you see
yeah,
it in, I think I pointed this out to you over the weekend, right? The true OI keeps going up. So there's definitely some shorts in here to the tune
yeah,
of,
yeah, yeah. That's for sure, man. There's also T-wapping buying on Bitfinex by a lot of
Mhm.
margin longs. So like we need to see like any sign of slowdown in selling on Coinbase. Let's say for the next 3 days, if we get 4,000 BTC outflows from Coinbase, I'm sorry, from Grayscale, and the discount even narrowly, comes closer to zero, and even if it is still in discount, if it comes down to zero, I think we see a bounce.
the
But that
fuel's there. I
probably
mean,
is
they
the
could,
last bounce. Yeah.
if they wanted to squeeze this back to 44K into the monthly close, I think they could do it just to get,
Yeah.
like some mean reversion into the monthly close. I think that's a valid scenario. Bounce to maybe
Yeah,
42K.
that would actually that would be very surprising, to be honest, because yearly open was 42,400, and if this closes at 44K, squeezes and closes at 44K,
What do you
that's a
do then,
green
right?
monthly candle.
Yeah.
That's a green
And what
monthly candle.
institutional adoption? Like
Yeah.
we're so used to, I don't want to say the R word. We're so used to less professional people painting these charts, right? And now we have a
Yeah,
totally different set of market makers that we don't understand their patterns, their rhythms, etc. There's going to be a steep learning curve here. So just remain open-minded. Like everything we're talking about, like, yeah, it'd be great if we get that crash to 32,000. But it's gonna, like, this is plunge protection here. Like these people are just gonna keep, they're gonna keep bidding the lower it goes. They were happy to buy at 40,000. They're gonna be happy to buy at 32,000. So maybe we don't get as deep of a drawdown. There's
yeah, this is a healthy correction, really a
Well,
healthy correction. Even
You
if
have to
it
keep an
drops
open
another
mind with
20%,
how,
yeah.
yeah, how the
yeah,
market's changed.
well, JJ, I wanted to bring up, I mean, one of the OGs in the space, Arthur Hayes, was talking about how the market was going to be coming down. He was looking to get
Yeah,
out. We were talking about that offline. What was your
probably more
perspective
of a
on,
hedge.
on an OG kind of sharing his perspective here? Especially, the guy from Bitmex, we talked about people painting, the less professionals painting the charts, and now it's all changing.
Hey, he helped those so those puts I pointed out last week, we actually front run a bit, and then it seemed like some more put demand came in after he tweeted out that he was buying. I think he bought 35,000 March puts. That was
Hmm.
his trade. So we kind of front ran him with those February puts in the 40 to 37 region. And due to the IV effects and more demand coming in after he tweeted that out, he's got a nice bump up. So there's alpha to be had on this show. Keep tuning in.
Yeah. Okay. All
We'll give you the
right.
trades before Arthur tweets them out.
Yeah. Okay. So
Yeah, that's basically his play. Is he's looking for one of those deep corrections back to the 200-day moving average. So he bought 35K
Mhm.
March puts, and those will really get it. Like we'll see a big IV spike if we fall below that level. Those would get him a nice return. So we'll see if this bid wall continues to hold that support. We're probably good for a bounce into the monthly close. But I mean, if they keep persistently selling into it, we could just keep bleeding lower. So it's just, if you are short here, I would recommend kind of just keeping an open mind into the monthly close. Maybe look for entries higher. If you're looking for longs, wait for sure. Don't
Okay,
catch
well
this falling.
let's kind of get into the final episode, part of the show where we like to go through some trade ideas. So I want to do a couple things. Benjamin, I want to ask you, I mean, we just painted the picture to be risk off, but I want to ask if you have anything that you're seeing on your screener or any other data would suggest there may still be some sniping opportunities. JJ, I want to talk a little bit more, go back to that DGen trade, kind of walk it through from where it started to where it is today and look at the profitability. And then just open it up. Is there anything else you guys are looking at? Maybe it's even outside of crypto. So, Benjamin, let's start with that. What are you looking at all? Is your screener giving you anything? Your spidey sense is tingling because you just painted the master bear thesis for why you shouldn't be in the market and have your dry powder ready.
Nah, nothing is tingling the screener. In order to buy, like, no, nothing is tingling the screener. Everything is in neutral to bearish zone because alts have only now started losing support zones. So it's a little too early to considering buying because, for example, we were discussing about Solana. Let Solana reach somewhere between 65 and 70, and we'll see the reaction there. Because Solana was the strongest altcoin, right? So that is the ecosystem coin so far that has been working out, the L1 that has worked out in this cycle. So we need to see how the strongest of pairs work. One of the biggest concern I had was that Solana and Link were leading the entire rally in 2023 and after the breakout. And Link stopped at 18 and it just completely stopped running and was just consolidating for the entire 2.5 months now. So that was bullish and bearish for me. And Link is now losing support and it's starting to drop, which has me worried. Because if the strongest of these pairs, which is Solana and Link, they're dropping, they need to find support. Until then, there's not much huge incentive to trading altcoins on the buy side. So we need to see if we form a lower high and then it gets rejected, and then we have another round of shorting that can be done. That could be a very good hedging opportunity. So I really do think there is going to be another hedging opportunity. I don't think anyone should rush in and short here. Like, sure, we have broken down key levels, but this
You're selling into the
market
hole,
always,
but
yeah.
don't be
Okay.
offsides.
Market definitely, yeah.
Right. So
It's not worth it.
yeah.
There's no free rides. If you try shorting now, they're gonna rip you for sure.
Okay. So for those who are looking for sniper opportunities, it's time to be a little patient, maybe sit on those hands. And I would say check into the next couple of episodes as Benjamin comes back and starts to reveal when those opportunities may present themselves. JJ, I want to come to you. All right, let's go through this DGen play we've looked at a couple times. I'm assuming it's the same one that we talked about. I think we started going last week. So talk about what the setup was and sort of how it's looking. I mean, if someone had gone into this when we first talked about it, would they be in the profit?
Yeah, let me pull up what the numbers were because they've definitely multiplied over the past week. So here's what we were looking at last week. These are the February puts, how they were priced then. So we see the 40,000 was around 1,500, 39,000, 1,200, and 38,984. And currently those are 2,600, 2,146, and 1,700. So they multiply quite nicely.
Yeah.
You got a nice double there if you played it. I would honestly take some profit here just because the things we were saying, like things are getting a bit oversold. Could it go lower? Yeah. If you want to leave, like if you bought multiple contracts, sell one, keep one. But I think this is the part where you take profit. We got that nice spike in IV. You don't want to be greedy here.
Well, this is the DGen trade, so the chances of them being greedy are quite high.
Yeah. Well, what you could do is you could sell these and then buy shorter dated ones. So if we do get a crash, say you could buy the February 1st ones for a fraction of the cost, maybe. Do something like that where you hedge yourself a bit. Just don't. The thing about options is if you try to hold on for that major play, they're just going to expire worthless. So it's like see profit, take profit type deal there. Or you could even hedge them with longs. Like you could look if you really want to keep that short position. Let's see what we got here in terms of calls. So the IV on calls has really dropped over the past week. So right now I'm looking at February 1st calls. So if we go to say 41,000, you could buy one of those for just 568. So if we get a move to 44,000, those would be worth around $3,000 of profit or so. I think that could be a good play there.
That's an interesting
if you
one.
want to hedge yourself.
Yeah.
And even if you just want to play a short-term bounce, you could basically, I think right now you could use the 100-day moving average, which is around 39,200. So that would basically be my stop. I would buy the 41,000 calls expiring on February 1st, hold it through today, see what happened with them. If we get that nice impulse spike up back to the yearly open levels, those would get you some nice profits. And I think that's definitely a move where if you see those multiply, sell them, because I don't think any bounce from here will last very long.
Oh, no bounce from here will last very long.
Doesn't mean you can't profit off it though.
Yeah. So for all you DGens out there that are looking for some plays, realize that if you'd been here just a couple of episodes ago, you would have heard something that would have net you a nice profit. And of course, we know that you're probably not going to be using these for hedging. So these are just for striking out, trying to hit a grand slam. Okay, so there we have it. We got Benjamin saying this is not the time right now to be looking for sniper opportunities. JJ saying, hey, if you're in this trade, now is a good time to start taking some of the profits off the table and perhaps waiting until that next entry is ready. We have talked a little bit about coin earlier in the episode, but I think what I'm going to say this, and you guys can agree or disagree. It feels like any of these beta plays, be the equities like coin or the stocks for mining like TeraWolf or Mara, all those I'm going to guess right now are kind of at a risk off zone. Given that if we start to see further downside on the cryptocurrency market, I would expect those to follow suit.
They're just like altcoins. I'd see there's no difference in them. They have some more fundamental factors, but I wouldn't pay too much attention.
But the interesting point is that now we have a lot of altcoins in the stock market, thanks to our minor stocks.
Mm-hmm. Yeah, that's what I mean. Like you look at the equity plays, I think they're all basically altcoins packaged differently. So when Bitcoin, like if Bitcoin somehow breaks out above 44,000, I would expect all those stocks to start ripping again in dramatic fashion due to how much short interest is coming. But as long as Bitcoin's in a downtrend, they're going to outperform to the downside. So just look at it like that. Like if we get a definitive break back above the yearly level, I think you would get some nice entries on stocks like Mara, MicroStrategy, Coin, etc. But if Bitcoin keeps falling, they're going to outpace it to the downside almost 100% of the time.
And JJ, do you think, in fact, I've been thinking about it quite some time. And do you think that a lot of these US investors who are not able to access a few altcoins, right? Because they cannot access a few DEXs, they cannot access a few perps and so on. These options on these beta stocks are pretty good to trade, right?
Yeah, they're
especially
super
when
liquid.
You are at rock bottoms, because the liquidity is very good over there. So
yeah, it's beautiful. It's a beautiful
in fact,
market to trade.
It's a good way to get exposure to even Bitcoin indirectly, rather than even buying these ETFs.
Yep. So like, look, if Bitcoin, like this is actually isn't as crazy as it sounds, it's not a terrible spot to take a shot with MicroStrategy, because where it is on these RSI lines. So if you look at the weekly chart here, hit right on 50 RSI, which it's been holding basically all year since January of 2023. It just kind of rode this through the uptrend. So your risk reward here is really great. Like you hold this for a day, you see what Bitcoin does. Those options can multiply. You buy like a 500 strike, maybe Bitcoin squeezes, and MicroStrategy goes up 10 to 20% tomorrow. Nice returns on profits. So there's all these opportunities that exist by playing these equities as beta to Bitcoin. If you think Bitcoin has a chance at squeezing, and vice versa to the downside, Bitcoin gets that move up to 44,000. You're on the sidelines. This would probably get overextended, and you'd have a nice chance to short it. And the advantage of that beta effect, and then you also add in the leverage that liquid options give you on these, it's really a beautiful market to trade. Big fan of it. Beautiful market to trade. Okay.
And to be honest, that's available only for the US traders. So you can be proud of.
It's the give and take, because we can't trade in many venues. But,
we can't trade,
but we get the equities, which is it's like Kevin options on alts. So
right. Good. Okay, guys. Well, I think that's going to do it for today's show. Thank you for everyone who tuned in. I know we come across as bears. We're just trying to be the realists here to give you the perspective so you can make the better, most sophisticated decisions you can make as an investor. If you're just looking at a good time to time your entries for long-term holds, or if you're going to be more like the traders here, like JJ, who's actually looking for something that's more in the near term, something just over the next couple of weeks, but you're able to make those decisions. That's what we're here for. So with that, I'm going to say what I do every show, which is JJ, Benjamin, thank you for being here, dropping the alpha. I love having you guys on here. So I'm looking forward to our next discussion. I think we're going to have to dive a lot deeper into these beta plays that are just equity stocks, maybe actually looking at those a little bit more. But that will have to come another day. If you're out there in the market, stay safe. No matter what you're doing, keep a little dry powder, and definitely check in on the next show. This is Marconi White signing off.